Welcome to another edition of Your Daily Five. My great pleasure today to present my co-host, Professor Bruce Fraser. Bruce, how are you today?
I'm terrific, and thanks for having me. It's going to be a fun episode.
We are on to some very interesting material, and that is riding the RSI range. We're going to take a look at some of the interesting range rules that Dr. RSI, Andrew Cardwell, has for all the students who want that information. Let's take a look at a quick scan on the range rules. And as I go through this scan, I'm going to ask Professor Bruce to think about some of the concepts in the range rules and what they mean. In this case, we're going to work with a standard setting on the RSI. It's 14 periods. StockCharts, a great article on how that's calculated. Certainly urge you to take a look at it. We're not going to cover that today. But we want the RSI today to be below its 9-period moving average. 9-period moving average, very important in Dr. RSI's world. We're going to cover that in a second. But sometime in the last 3 days, we want that RSI to have crossed below that 9-period moving average, and we want the RSI value itself to be less than 60. What are the range rules that we're implicating here, Professor Bruce?
Well, dear kindred spirit and good friend Andrew Cardwell, who also is a recurring host on Your Daily Five, has really developed an incredible methodology around RSI. And it's a trend-following methodology is the way I would describe it, in contrast to the way a lot of people use it, where RSI is a sort of a overbought, oversold indicator where they're looking for divergence, where Andrew is looking for confirmation of trend and also the emergence of an accelerating trend. So in this case, the RSI 14 with a moving average of 9 around it is a great trend indicator. The range rules are such that a stock, index, commodity will tend to trade, when it's in a bear trend, will trade between 20 and 60 on the RSI scale, which goes from 0 to 100, but spends most of its time in that, call it 30 to 70 area, where in a bull market run, bull trend, the bracketing is between 40 and 80. And so the range rules, and oftentimes what happens in an uptrending market is you'll spend most of your time between 30 and 70. But the key is that you're bracketing for bull trends and bear trends. That would be the way I would summarize it.
Absolutely. And that's what we're looking for here. As you can probably tell, things that have exhibited weakness, which is the RSI 14 crossing its moving average to the downside, and the RSI value itself is below 60, which is the upper level in the bear category. We're going to rank or sort our results by the slope of the RSI line itself over 14 periods. Let's take a quick look at what this would look like in a scan map. As you all know, I like to draw my scans. That way I have a good sense of what they're trying to do. Here we see 3 days ago the RSI was above its moving average, and then at some point in this 3-day mystery window it crossed. Now SMA 9 is above the 14, and also our RSI value is below 60. Very interesting stuff there, wouldn't you say, Professor?
Very. And the thing I'd like to ask you, John, very briefly is, I think the power here is the fact that we are able to do scanning on indicators like RSI and be able to identify the conditions that set up for these essential emergence into an uptrend or a downtrend. And so this is really a very straightforward, simple example, but elegant, and that there's even more compelling scans that are going to be available to us as we move forward with this idea.
Oh, absolutely. Today we're starting with very simple 2-3 line scan, which is where I generally like to be. I like them short and simple. And that gives us a very great power to explore what this indicator can do for us. So the RSI fans out there, check out Dr. RSI's offerings on his website. We'll show you that in a minute. But play around with it. A couple lines of code, you never know what you're going to come up with. Let's take a look at what we get when we do run this scan. 480 results. Big slice of our universe, which is the Dow, the SP 500, NASDAQ, and the SP 400, staying in the mid to large cap category. And we see 480 situations or technical conditions where the RSI value is below 60, and we've had a negative cross of the RSI to its 9-period moving average. A lot of discretionary here. That really confirms what we see on our sector studies. Wouldn't you say, Professor?
Yes, and let me ask you, this number being so high in the result, this is really part of the condition of the market here, where the market's been weak and downtrending, and the RSI is picking up that weakness? Is that what's going on here for this big
Yes,
list?
correct. You can use scanning results almost as breath studies, and we're going to show the folks our Wyckoff micro report that does exactly that. That's coming up a little bit later in the show, but 100%, almost half the universe of stocks that we polled are trading in a situation where the 14-period RSI is below its moving average, and we're below 60 on the RSI. Those are not strong numbers. That's weakness. We're scanning for weakness, and we're sorting for weakness. And as you see, we get the most negative slopes first. Let's take a look at what negative slopes look like on our first chart. That's a negative slope. Look at what has happened here. We had a very brief peak above the moving average. The smoother line is the moving average. Very brief peak above, crash down. From a Wyckoff perspective, Professor, what does this relative strength tell us?
Well, the structure of this range-bound condition back to November is evidently distribution. I think that deep correction in late January is what we call a sign of weakness, and was a significant clue that there was a lot of supply. Then a rally up into an upthrusting action, an upthrust after distribution with a test in February set up the condition, and this response, these 3 very sharp days down, is just evidence that the stock has been largely distributed by strong holders throughout this whole period back to November, and it really shows up as a Wyckoff classic setup, and the relative strength falling apart is quite dramatic.
This is where the folks find out they're holding the bag.
Yeah, this is really a tough situation. And that was the single worst stock in the list on the slope ranking.
Correct. It came through as the worst slope. So we scanned for weakness and we sorted for weakness. What do we get? The weakest of the weak at the front of the list. If you want to scan and sort in what I call tension, you can take the strongest slopes first after scanning for weakness, and that tension will give you a completely different look. We're going to take a look at those toward the end of the show. Here we have slightly less aggressive slope on the moving average. That's why this is second, not first, but definitely looks like distribution, failure, possible redistribution here with downsloping moving average over a considerable period of time. Trying to come back, but doesn't look that positive.
No, as a matter of fact, this is a great example of the range rules at work. Notice back in December, the extreme oversold condition in the RSI down to 30, and then it really bracketed between 30 and 60 here from last December to the present. And so you can see there that the range rules at work, rallies up to 60 and then fails again. And as soon as it crossed below its 9-period moving average in mid-February, after getting slightly above 60 is when the trouble started for Wynn Resorts.
We'll take a quick look at the next one. Now this is Energizer Holding. It's from the middle of the list, that 480 candidate list, and we see that our moving average slope is quite a bit different here. Much more gentle, even slightly positive over, say, 30 periods. And we still have distribution, redistribution. This is a classic structure here with a little structure that actually distributed above prior overhead resistance and crashed right through, attempted to rally back down again. But we're in a fundamentally different position with respect to RSI. It's hanging near the lows. That's another one of the range rules.
Yes, and a great example here is notice in mid-January of this year that it attempts to rally back up to 60 from under the 9-period moving average and touches the 9-period from underneath, and the stock is already declining, and that's a very vulnerable spot. And so you can see the confirmation of the downtrend occurring there in the RSI. Nice example.
We've got another one. We've marked some of the range activity that Professor's referring to. Again, we see down from a value in the 60 to 70 neighborhood, recent rally, and we did in fact get our RSI cross below the moving average, which is what we scanned for. Much more ambiguous picture, I think, on relative strength. RSI is telling us that we have definitely some issues here, and structurally speaking, on the Wyckoff side, we have a fully formed range that is distributional with a rally back to the ice and failure at that point. What are your thoughts, Professor?
Well, those two boxes on the left on the RSI are just examples of the range rules at work, maybe in a more bullish setting, because you can see that there's an uptrend in Ingredion in the first box on the left, and the range, it stays consistently between 40 and 80 throughout, and there's a nice uptrend occurring in the stock price. Once it gets below 60 and crosses below the 9 there is when you're starting to have a confirmed downtrend, and that occurs in the first week of June. And then the second box in the middle shows an example of an uptrend beginning while price is basing, classic Wyckoff structure with a hinge. And you can see there that right there in mid-September, the RSI is living above a rising 9-period moving average, and the uptrend begins, and the range rules start to work on the bullish side. So really nice example of trend following with RSI there.
Awesome. We're out of time for our last two candidates. We'll pick that up in overtime, but say hi to Dr. RSI, Wyckoff Market Report. Check out our friends at Wyckoff Analytics, and that's it for your Daily 5. Thank you so much, Professor.
Thank you.
We're back after a short break. This chart, QLYS, it's from the far end of our sort criteria. So we actually have positive slope to work with on our sorting. These are stocks that still have positive slope on the RSI, and that has implications for the chart itself. Indeed, we are below 60. We got barely across on the RSI to the moving average, 50.14 on the RSI, 50.65, 0.5 of a point there. And look at how high we are up in a structure with a declining, really almost trending down RSI value there. Professor, what do you see? Is this a possible last point of supply?
Ever increasing volatility since November. and that is a classic sign of potential distribution. Also, you have the range rules at work in the RSI where it rallies up to the 60 level and then turns back down. And so the RSI is almost clearer about the fact that this is not developing any kind of a sustainable trend. The rally in late February into March is quite a strong rally, the best one really that we've had since November, but it has been to a value on the RSI below 60 and is to a lower high. And so I don't think there's anything to do with this stock here other than just follow it as a case study, but because of the strong relative strength, but it does have those downtrending characteristics.
Potential trouble. Either way, really hard to tell what that one's going to do.
Yeah, but a great case study.
Absolutely. Let's take a look at our last stock. Here we have Selective Insurance. Insurance been a favorable group of late. We see tremendous relative strength in the past 4 or 5 weeks. Interesting situation on the RSI itself. We're uptrending on the moving average and the RSI over the past almost quarter, really. It's come up and the moving average has turned up. And we're almost now 2 very strong bars up to a little flag formation. What do you see here, Professor?
Well, there's some things encouraging about this stock, and that is, number one, the relative strength is really on a tear here, and has been in an uptrend now since November. Very constructive. So relative strength is absolutely key in this very weak market environment. The other thing is that notice how the RSI is persistently staying in 2022 above the 40 level. So it has the attributes of positive range characteristics. And note how, this is the part I really like about this methodology. Late February, end of the third week of February, RSI gets above the 9 and then stays above the 9, and they both start rising together in the last week of February into March, and then shortly thereafter you get that very sharp jump. So if it can hold here in a tight, narrow range and then be able to follow through here, it could be above the August highs in short order. So this tends to be doing the right things in my mind right here. And so it's an interesting structure in the RSI. It's a nice RSI case study.
Isn't it interesting what a variety of stock candidates that we can get merely by having a broad form scan coupled with a sorting method that lets us separate the strong candidates from the weak candidates. So here we are at the far end of the list with the best attributes on a slope basis for the RSI, and we're getting a completely different picture than we did in the Capri and Wynn cases early on. Those were just disasters.
Well, and I'm really looking forward to doing some RSI scans that are based on the positive range rules, and where we're looking for these positive characteristics of rising trend. And it's going to be a really, really powerful scan, I think, especially if we use some relative strength and price characteristics to be able to find emerging stocks that are ready to go into important uptrends, and using the RSI as a nice scanning feature for that.
Well, I can tell you what we need, Professor. We need the doctor. We need Dr. RSI. He is the intellectual wellspring, all things RSI, and we need his help to be more effective in our scanning techniques. You can see what a very simple scan does, but I think with the help of Dr. RSI, we can really do some nice work, narrow those lists down, and get right down to opportunity. What do you think, Professor?
Well, absolutely. And Andrew's very excited about this project. But also the other thing is your demonstration today of the scanning technique really shows what a powerful tool an indicator like RSI can be for scanning purposes, and that it might actually be better to scan on an indicator like this than it is to try to scan just on price. And so this is very exciting. I think we're going to really see some great outcomes in terms of scan language from this.
Absolutely, because nothing in our scan really related to price. It was all what the indicator was doing. And indicators really, when they're understood and used correctly, they have deep meaning, no question. We have a scanning-based newsletter, Professor Bruce and I working on that, Wyckoff Market Report. Very interesting product here because it is scanning-based in its entirety and gives us the opportunity to look at the market through the lens of Wyckoff events, as well as the top-down method. I think that's your favorite method of market analysis, is it not, Professor?
Oh, absolutely. And the Wyckoff method, and here's the thing, it's been really a mystery for people to try to figure out how to scan on Wyckoff concepts. And this whole newsletter is basically based on scanning for Wyckoff principles and then organizing them according to the categories of these different Wyckoff events. It's quite impressive in my opinion and very exciting. And so check it out.
It's available now, and we're working on the user manual because it's got a lot of interesting prospects in it. You can check that out over at our friends Wyckoff Analytics. It's available there for your review. There's a few free copies. Take a look. That's it for today. This is your Daily 5 into overtime. Thanks so much.
Thank you, John. It was fun. Appreciate it.
Alrighty, bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.